So, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live here on Saturday, May the 9th, 2020. As always, all information is for educational use only. Not making advice about to buy, sell, or hold them. By watching this, you agree to not make actual trades. Anyway, as a money show speaker, I will be speaking for their event on Monday, so do register for that. And just a reminder, we are sponsored internally by my live trading room. With so many thousands of traders I've trained over the last 21 years, I certainly encourage you to give it a shot. We meet Monday through Friday, 8:30 to 10:30, and it's a really good opportunity to ask questions, see live real trades I do oftentimes, and also see the best charts of the day. So let's get underway with this. The main point is that our MACD flashed a buy signal here, and it's compressing here, so we may get main fact is we got a logarithmic curve type pattern in the S&P. So it's slowing down its upward momentum. And the candle heights, intraday trading ranges have been compressed. So that's telling us the buyers are kind of running out of steam. Now, the last time that happened was when? History repeats itself. We had larger candles on the way up. They got really flat before the epic fail. We have larger candles on the way up, really flat before. Now, I don't know that I'd pull the trigger on a short yet, but if we lose support, watch out below, right? The candles are getting flatter just like they were back up here right before the boom. So this is a boom time on the way up. MACD flashing a buy signal. We're almost, but not yet. See, this is what you want to see for a sell signal, right? Where the red line crosses back down under the green. Now, I'm not a big fan of squiggly lines because they tend to be, well, they are lagging indicators, but because of a variety of things, we want to be cautious. So what I'm going to be doing is tightening up trailing stops on my open long stock positions into next week and be ready to pull the trigger on the inverses if they finally come back to life. Now, we've got remarkable strength in our coronavirus plays lately, like Beyond Meats, up at 135 here. You can see it's taken out a 90-day high. And from a bullish cut pattern perspective, that flashes a buy signal to me. If we get a pivot down here, here's east and west together. And be sure to learn candlesticks exclusively from Steve Nissen at candlecharts.com. But anyway, name that candlestick pattern. Who can tell me what's that pattern that tells you it's about to go up? Right? I learned so much from Steve, and I use it daily because it works. So amazing. Now, it works even better when you have bullish confirmation from a Western technical. So we have two buy signals in Beyond Meats here. We had wow, everyone's saying, thanks, Spirit, Deanna, Tim, Wendy, Don, Walter, Frank, Steve, Gerald. Absolutely, it's a bullish engulfing. A bullish engulfing there, that's check mark number one. Now, a good professional approach is to scale in or start small and snowball, as I call it, or trade wide, not deep in terms of numbers of instruments. But anyway, I will start a trade, maybe just 20, 30 shares on one signal. I'll double into it if price action goes up and even go larger if you have a confirming technical signal like this, which is a bullish reversal in the MACD. So that's buy signal number one. That's buy signal number two. And we're uncrossed in MACD line, so that tells us we're still long bias. And sure enough, we broke above the 90-day resistance and Beyond Meat. So that's a good technical pattern to learn. Other charts that may be worth a shot are some of the coronavirus plays like Novavax. I remember when Invax was down at 4 or 5 a share. Anyone else remember that? Ran all the way to freaking 26. Now name that pattern that I'm pointing to. What's that particular pattern with the two shadows on the upside? That's called a hint. Also the name of a personal hygiene device. What's that called? Who can tell me? Right, Wendy. Right, Chetan. Right, Deanna. Right, Mira. Right, Tim. It's a tweezer top. So although not a shooting star, it still tells us that we've got some basically kind of a bear cup type of a pattern. So that's a sell signal. It dropped down here to support. We got a bullish engulfing right there. And we're held support above the candle shadow there. We're starting to get a recovery in Invax. Next up to bat, we've got INO. another CV play, another pharmaceutical play. And you can see it's been all over the map, but this one may be worth keeping an eye on in case visually it breaks above that whole number 12. Now remember to use whole numbers in addition to wide trading ranges as gating criteria or milestones to help you identify whether or not a trade setup is worth taking, right? The number one criteria that I have for a chart is it's got to be volatile and it's got to have liquidity. It's got to have the two V's, volume and volatility, right? And from a volatility standpoint, the most important scanning technique is to look at the range over here. This is interesting. This is critical. This is the ace of the deck. This is the king. And a lot of people have it backwards. They'll look at this as everything. This is the ace. All we pay attention to is magic chart patterns. But what good does it do to trade something if this, say the range on this was say $1 to $1.50? It's not worth trading because your risk reward numbers don't add up. What you want to add up is a profitable trading strategy. What you need to do to potentially help get there is make sure you're trading charts with big ranges. That's why I do that. So now another quick tip with our S&P flattening its curve, but still on the uptrend. It's flattening its curve, but still headed up. So we don't want to open up yet, to use an analogy. What we see in our VIX is, as Melissa on Fast Money and CNBC yesterday wisely pointed out, the VIX lost the 100 SMA line, right? So it's still been in a downtrend. However, we do have the same exact opposite. We had the sell signal here at the MACD crossover that dropped, but we're seeing kind of like a logarithmic curve. And the red line has not yet crossed above the green, but it's getting closer and closer to potentially going back up. So now's a good time to be paying attention to some of the inverse ETFs. And I cover exactly how to trade those live in my live room 5 days a week. So do pay attention, particularly next week. I've been in and out of them this last few weeks trying to bottom fish unsuccessfully. I've been getting stopped out trying to catch a bottom, but I'll get it eventually and do extremely well. I always do, or usually do. We'll see if it bounces next week and things like our TVIX and other instruments. But anyway, and I mentioned this to my traders, to all of you guys who are here earlier, what's the key support level on the VIX? What's the key technical support level on our VIX? It's really critically important if you're going to make it as a trader, be paying attention to the S&P, the VIX, market depth and breadth, and market internals like the different sector strength. Market internals like the VIX and sector rotation, looking at some of the sector-specific charts. Right, the 200 SMA, right. Right, Daniel, right, Mira, right, Walt. Right, Mark, right, Mukesh, right, Naresh. Right near 25, which is the 200 SMA line. So my strategy, I put on a trade in TVIX yesterday because it was only 164, 165 a share. I'll stop out a holler anchor if it loses the equivalent of the 25 on the VIX, which on its chart is pretty dang close. It should be about 150 or so, right? So we're seeing this compressed volatility that's been in a downtrend. Now let's take a look at some strong charts. We already looked at Beyond Meats and Novavax. Let's take a look at some intraday trade setups. That's beyond yesterday, right? What a nice run from 120 to 136. A 16-point run. Now, obviously, you wouldn't get all 16 points. What I target, by the way, a quick profitability target is expect at best to get 50%, 30 to 50%, 50% if you're fortunate, around half of the range on an open range breakout. So this guy ran 20 to 36 is 16, so half that's around 8 points. So if you're about 125, sold 133, that's great. If you get a piece of the middle, 30 to 50% of the previous day's big run should be an exit target, or a profit target, I should say, for the current day moving forward. We had some really strong charts. Moderna, a good coronavirus play yesterday. Here's one, PTGX. Now, as a rule of thumb, the cheap charts that have big percentage gains are often the most dangerous charts to trade, because I don't know about y'all, but I probably would have got stopped out and not been successful trading this one. And I didn't trade this one yesterday. I traded TNA profitably, but on the small cap bear or small cap bull. But haphazard charts are where traders' accounts go to die. Let me repeat that. Haphazard, especially cheap charts that zigzag up and down, are where traders' accounts go to die. You want more consistency out of your charts. You trade a chart like this, you can see whole number support at 9, whole number resistance at 10. And trading 20 or 30 cents above a whole number, selling at 80 or 90 cents under the nearest whole number is a very effective, intelligent trading strategy that we cover in my live room every day. And again, if you're not yet a member, do register now. Brought to you by my live room at tradingtheopen.com. It's just $7 for a 3-week trial. And I've been running the room for 21 years now, since the year 2000, or 20 years, whatever. So it's been quite the success story. And I both trade and train, trade my own account. I trade traders. We got lots of techniques. We got specific entry triggers to learn from. And I strongly encourage everyone to just use a demo account so you can practice to your heart's content with no risk. Use a demo account, so paper trade only, and get interactive coaching and entries. Bring your questions too in real time. Say, hey, Ken, I'm looking at, say Beyond Meats, what do you think? Or I'm looking at Moderna, what do you think? And I'll give you a specific trade strategy or technique that I would be using where I'm trading it. So it gives you kind of a step-by-step walkthrough on exactly not what to trade, not only what to trade, but also how to trade it from start to finish. So that's one reason it's been so popular. So do be sure to join me at tradingtheopen.com. Now back to our regularly scheduled presentation. What else we got going on? FSLY was a rock star chart yesterday. Let me put this over here so you can see. I'm looking at FSLY. Holly Frontier up nicely. Twilio, kind of pricey, but a nice trading range from 166 to 182. I trade OXY. Didn't do a whole lot, but nice run. I'm still in it, ran from 1420 to 15. Again, whole number resistance. So as you're looking for spectacular charts, I'm an expert at finding them. It's what I've been doing full-time for my life for over 2 decades, training tens of thousands of the world's traders. You may have seen me at Money Show, my award-winning stocks and commodities articles, and all the rest of it out there. But in a difficult market, you really owe it to yourself to give yourself an edge by understanding which charts are worth trading, number 1, how to manage risk with tight stops, number 2, and number 3, how to do trade management, whether it's re-entries or position sizing. Let me ask a quick question. How many of you use position sizing or scaling into your trades? Instead of all or nothing, which usually gets death of 1,000 cuts or false breakouts and stop outs and all the quagmire and doom and gloom that cost us money as traders. It's frustrating as heck when you get stopped out. You buy something, hey, it looks like it's going up. Oops, I get stopped out. And then it runs up without you. And you go, dope, I hate when that happens, right? How many of you, show of hands, or type in the letter Y or yes, use as a countermeasure to that position sizing and scaling, where you feed the winner, you starve the loser. You add to your winners, you scale out of the ones that aren't winning. And preferably sooner rather than later, right? Now you should never ever, with rare exception, add to a losing trade. You scale out of your losers, but put re-entry triggers back up if they bounce. So that way you avoid the fear of missing out, the FOMO effect. Well, thanks, Deanna, Fran, Bill, Mira, Mark, Bob, Tim, Paul, and Nidra. Take small positions to limit risk. Absolutely right. They scale in and out. Good to hear it, Jim. Scale in and out. I do now. Thanks, Phil. Yes, in capital letters, Frank. Good to hear it. Pop and drop. Yeah, right, Walter. On the cheap charts, you want to be careful. Hey, Jesus, how you doing? Right, good point about following your teaching. Okay, thanks, Mark. Yeah, it's all about taking small shots that you scale into when the ones that work out. Now there's a balance that you have to strike between over trading and under trading. What I found in working with thousands of traders is you guys tend, just generically speaking, traders tend to under trade. How to say, they over trade single instruments and they under trade the field. That's the correct way to say it. So, obsessed with the single instrument, like I've been known to do with TVIX, right? But I'm good at it, so I know how to trade that instrument. But the point is, I made so many thousands on the run up from the 38.6 and the 41 up to the 940 where I sold. So you want your P&L account balance to look like this. This was my small account challenge. I opened this back late summer, early fall last year. I think it was a total of $1,800, and I near tripled up to $4,900, largely due to buying, TVIX at 51, selling at 940. Now I had to sit on my hands and be patient, but I sold the near exact top, which was 1,000 in TVIX. On just 3 shares, I made over $2,000, right? Or close to $2,000, something like that. Anyway, you want your account balance to go something like this, where you go from a small account challenge up, and this is a screen cap of my Fidelity account for this one. It's gone back down a bit, but it's still well up above where I got in. The point is, you want your net account balance to grow over time, not to go down. We've all had accounts that have gone down. Been there, done that, got the t-shirt. It's frustrating, right? So what you want to do is learn instead how to trade a little more professionally. So anyway, I'm the go-to guy for that stuff. What else do we have? Let's see any other hot charts of the day. But seriously, try my live room. You have my word. I put a ton of work into it, and it's well worth much more than I charge for it. The tuition is just $197 a month for over 30 hours of live market training, compared to my Vegas seminars where people get 2 days for $1,500, and I had people flying from around the world for those. It's a bargain, and you don't have to travel, so it's safe at home, right? Stay safe, stay at home, and learn how to trade in my live room. We do cover instruments like this. They're relatively inexpensive. We don't focus on things over 40 or 50 bucks. Most of what we cover is $40 or less, but we try and avoid the $2 and $3 haphazard, pop and drop, choppy, low float, crappy, under $10 stocks like some of the morons cover. I like to trade more professional things myself in my own account. So I like big picture, by the way, strategically. I like MGM. I bought a little bit yesterday into the close. I like Apache. I like Uber. I like the coronavirus plays. Like I said, like INO and Novavax, Beyond Meats. So many trade opportunities out there. And your goal as a trader is to make more in your winners than you get back on your stops, right? Anyway, thanks for being here. I'm going to wrap up. We're just about out of time. I've got swing scans coming up in a few minutes, and thanks everyone for being here. Good point, Walter, saying he focuses on ETFs. Hey, Dan, you got a trophy. Good for you, man. Yeah, US Steel. Okay, thanks, Mark. Good to know. And JD and Zoom. Yeah, those are all, I've covered those in my live room. At one point in time, JD often travels with AMD. For some reason, JD and AMD and Micron tend to move together. Zoom is a good coronavirus place, as is Citrix, right? CTXS, so, which is GoToWebinar that we're using. So the point is there's a lot of trading opportunities out there, and you owe it to yourself to develop an intelligent, focused, step-by-step, methodical, disciplined approach with the strongest charts, with small initial starting size, with really inexpensive stops. I'm sure your family would appreciate that. Whenever I speak at live money show events, I always quiz the audience, like I did back in New York a couple of years back. I said, how many of you conceal your trading losses from your spouse? Now, I'm sure we've all done that at some point in time, but if you nervous laughter and people do that, you might want to consider a different approach, right? The definition of insanity is repeating the same thing over and over again. So I urge you, if you've been struggling in your trades, give me a shot, right? I've been teaching thousands of the world's traders the last 21 years, and I hope that these free events give you a taste, a sample of the thought process and the intelligence and the type of instruments that we like to focus on. Whatever is running sharply and consistently are the types of charts that I like to focus on in the live room. So anyway, see you guys there, and I'm out. Stay safe this week, right? Be safe, and tradingopen.com, give it a try, right? You have my word. I answer questions. I'm very friendly. I'm very honest. I'm very forthright. I like to go step by step through charts that make sense to trade, and also encourage traders to ask questions about their own favorite charts of their choice. And I will pull up the chart together, and if it looks good, and oftentimes we have the best charts of the day come from my members. I got so many well-trained, intelligent members in my live room. They'll ask about these kind of charts, and odds are it escaped my notice because I was focusing on other ones, and often those become the best charts of the day. So as a team, as a community of like-minded active traders, my live room is something I'm really proud of. It's my life's work, and as you can tell, hopefully I know what I'm talking about. I still struggle as a trader. I still take stops daily. I still make mistakes, but I've learned a lot of the countermeasures, a lot of the antidotes, the things that can help prevent or minimize the cost of being wrong, and hopefully leverage by scaling up into the winners. So thank you so much for being here. You guys have been an amazing audience. I appreciate all the kind words. I'm sorry I didn't have a chance to answer all the questions here in the interest of time, but I do appreciate them, and I appreciate you for being here. So do take care, trade safe, trade smart, and let's go get them. I'll see you next time.